Hey traders, Nick here, doing homework after hours for the chat room people. So somebody asked me about SBUX, and I haven't done a video on it in a while. Don't know if there's a lot of interest for it, so here it goes, short and sweet. So the question is, they wanted to get long through April or May period. So swing trade opportunity, midterm opportunity, maybe short term if we get it. So basically, the downside scenario almost played out completely. It may have a little bit more in it. You will find out either way this week, I think, given the overall market. So in other words, it's not likely to fall on its own, but it's not likely to rally on its own either. So what downside scenario? Part of my coverage is I do homework every week, and I do a webinar 2 hours on Sunday. And they submit tickers, and they've submitted this before. And I had these arrows on it, and it said, basically, watch out for this. Somewhere in here. This is a weekly chart, by the way, zooming out for like a big picture. And I literally said, look out for this, and it's played out almost completely. Also, it's falling into support and a prior breakout. So it may extend $5 or $6 more. There's no immediate support. That's the problem. You look left, it's too far back. We're talking, pandemic year. So we'll go down to a 2 hour chart. Let's just put the regular session, take out the overnight action. So you can see how it lost footing clearly by losing the February 24th low. That is a disappointment. Technically, it triggers the sellers again. So now the pops will be definitely sold. It was trying to go sideways after falling apart. So now it's probably going to slide lower because it fell. It tried to consolidate almost, and then it fell apart today. Very big disappointment to lose the 224 low. That was a flash crash on the war from the Ukraine that took the markets down. So now the bulls have nothing to help them out short term except a turn in the overall market. So fundamentally, it's not that bad. It's not great, but it's not that bad. So decent company, well-run company. They rarely make big mistakes. And when they do, they fix them really quickly. It's not expensive, 3.5 times sales, but it's really PE that matters in this case. So 24 PE is not dirt cheap, but it's not expensive either. So the fundamentals are neither a selling point or a detriment. Therefore, it's just price action. If I go to a daily chart, you'll see the lines I drew and how when you lose a shelf, look, this is almost like here. This was the October low. And they were going sideways, and then once they lost it, whoosh, down. So now they had the February low, and now they lost it all in one day. So let's hope it's a one-day problem so it can recover it tomorrow and go back up. Otherwise, the bulls, they do have support, but they have to look farther back. The September 2020 and the breakout. So here's the situation. If I'm long and I didn't do anything until now, I probably won't do anything. I could buy some puts or put spreads to protect me for March. If I'm looking to get long, I would probably prefer to sell a put or a put spread in it to start a position and leave room for error. Whatever I do should be part position, not full position, because of the overall market. Also, if I'm long already, I would definitely not add to my problem, because I don't know anything new today that I didn't know yesterday. That's simple, skinny on that one. Give it a like, the video, or a hate, don't care. Want to debate it? That's pretty cool. The notes section is open. Just keep it civil.